Bitcoin Cash. Of course, Amazon, by accepting them on Amazon for goods. Obviously,
mainstream retailers, here we come.
Yes, but obviously this is unconfirmed according to Amazon. Amazon needs to confirm it officially before we can say, okay, this is now happening. Because even if internally they're having these discussions that are extremely bullish and they're going forward, there can always be something at the last second that says no, and they won't release that until it's a done deal actually. So they are looking into it very heavily, as we understand.
And as we know, the crypto market, Elon can always tweak something and drop the prices or raise them as he wants, right?
Yes and no. I think Elon has a specific magic when it comes to markets in general, and we've seen him. He's very in touch, and he gets an innate pleasure of moving public markets, and we've seen him do it with his own stock in Tesla, where he realized that there was too many people who were short. And then he just sends one tweet that just starts a chain reaction and squeezes all the shorts out of the market. So he did something very similar with the crypto market, which we knew was over leveraged at the time. There's a lot of retail customers in the market, a lot of leverage that's being offered to new traders, and basically they all came and got wrecked in a single day. There was a liquidation event on May 19th. Which threw out about 1 million traders out of the market within a few hours.
So I think, yeah, probably that is one of the problems of the crypto market as it is. There's a huge knowledge difference and a huge experience difference between savvy traders and just the average Joe who decides to get into the market and starts trading. And I think it was backstage when you told me that 95% of the traders actually end up losing.
Yeah, I mean, this is in all markets, actually. Retail customers are notorious for losing money. I mean, there are ways that people can avoid that, and leverage, I think, is one of the killers of new traders. They come in with the promise that they can make millions of dollars off of high leverage, and then that leverage ends up being kind of a double-edged sword that they end up falling on. One positive progression, because a lot of the brokers out there and exchanges that deal with cryptocurrencies are largely unregulated or self-regulated, which means that they can basically offer endless amounts of leverage to specific clients. If they're in the UK, then they have the FCA who's going to say, okay, no, you can't really give us too much leverage into this market. But other jurisdictions allow it without a problem, so there's readily available leverage. Now we saw just the last...
If they're regulated at all.
Yeah, just yesterday we saw actually FTX and Binance, which are two of the biggest crypto exchanges, reduce leverage by themselves. They realize, okay, we better take it back or they're going to shut us down, and that's the way that the market moves forward.
I think that, beyond leveraging and beyond the knowledge difference, we also have the problem with, the regulatory vacuum in which the crypto and blockchain markets operate in. And we saw it enormously in 2017, 2018, where we had the ICO blast, and around 70% of the ICOs were scams, as it turns out. And I think that
you have to define a scam. I mean, what ICOs are basically. Blockchain technology in general is a new path towards raising capital, right? So instead of saying, okay, we have it, we're going to form a company, we're going to go get an underwriter, and we're going to go public, or we're going to raise privately with venture capital, you can actually, with a little bit of programming knowledge, mint your own coin, and then you can offer it to investors. And obviously, because this is something that's global in nature, and securities laws being as they are very fractionalized around the world, every jurisdiction has very different laws.
Exactly.
So it presents a little bit of a problem for global regulators who don't necessarily know how to...
In terms of securities, there's no such thing. Every country regulates its own securities law. But the problem is in this area is actually that it's pretty much open to fraudulent acts. And by the way, as Mati said, not all of the 70% were actually scams.
Yeah, you get people
the problem
who
is that
they have a model that doesn't work. something like that.
Yeah, they try pitching you a view that doesn't end up being into practice, put into practice. But another problem, and the biggest problem, is that the regulators, especially now with decentralized exchanges, the regulators can't follow and regulate. This is probably the biggest problem, because a decentralized exchange is actually detrimental to all of the factors that actually regulators check, like AML laws, anti-money laundering laws, or KYC checkups that need to be handled by the companies. And the problem is, in my view, with crypto and blockchain companies, is that the regulation tries to follow them rather than preempt the activity of these companies.
Right. So, I mean, in general, like I said, the fact that cryptocurrencies are born global in nature presents a problem for global regulators. So every country is going to deal with it a little bit differently. So we know China basically said, get out Bitcoin, we don't want to hear from you, and the United States as well. If you have a share or a token that looks like a company, then you're a security, and then they say, wait a second, you need to register with the SEC and things like this. The Europeans, I think, and most of Asia has taken a much more friendly approach, and Switzerland has already adopted, as of 2017, a very crypto-friendly stance, as has Germany and France.
Gibraltar also, UK tries Sandbox, but still it's...
and El Salvador.
Right? And El Salvador, yeah, right. We need to discuss El Salvador, where they accepted Bitcoin as their main currency or their official currency.
Yes, legal tender. I mean, El Salvador doesn't have their own currency really. They do most business using the U.S. dollar, right? So now they're basically giving people an option. Okay, you can use U.S. dollars or you can use Bitcoin, and we see that playing out.
It's okay to ask questions?
Please.
Thank you. Since you guys seems to be the expert, well, regarding to the average Joe, that would be me. Two questions. One, if a company already had KYC for millions of people that invested in it, does it, I don't know, seems to be a promise that someday this coin will be launched? Because it hasn't yet. The other question is, apparently, cryptocurrency is kind of hair salon. It's raining a little bit and it's spread like mushrooms. Everyone invent one. How should we, the average Joe, can know or guess which one to choose or trust or whatever?
That's an excellent question.
I think the second one is for
Please
you.
repeat the questions for the audience inside.
Sure.
Repeat them. Okay, thanks.
So, second question, then repeat the first one, so I'll be accurate. Second question, in short, is how to vet projects carefully in a good way, right? In terms of there's a lot of projects to choose from, how to choose right.
Yeah, everyone invent one.
Yeah, so actually this is a large part of what we do in quantum economics. We're a firm for researching and analysis of cryptocurrencies. So, I mean, everybody is welcome to subscribe to my newsletter at quantumeconomics.io, and we speak a lot about the different projects that are out there.
I'll also get there my investment advice, just.
As a newbie investor, I'm going to tell you very simple. The best way to invest in crypto are to go with the top names. Bitcoin, Ethereum, right? Anything that's in the top 5 or 10 of the market cap.
Doge is one of the 10 right now.
Doge, I'm an investor in Doge. I like the project. I like what Elon Musk has done for it, and I've held Doge actually since 2014. And the next tip, it's A/B. It's go with the ones that you know and the ones that are very big name and have been around, that have stood the test of time, right? So Bitcoin and Ethereum, and dollar cost averaging, right? And other than that, you can diversify, right? So you can play with a new coin, right? And say, okay, even if it's only a minority part of your investment, I found several times when a very small investment suddenly balloons, with thousands of percentage of gains into a majority holding, right? In that case, you need to come and reduce the risk to rebalance your portfolio and take those types of precautionary measures.
Yeah, by going with those who are already known, like Ethereum, Bitcoin, Doge, according to Elon, who's playing with the market like my grandson with a ball, it's kind of preventing me to start from the beginning. Like I wanted to start with Bitcoin, but I wasn't smart enough to do it back then. So now I'm looking for new ones. And if I'm not investing from the beginning and only joining them when they are already known, I'm missing something.
Yeah, you're missing the big bonuses. You want to repeat that question? Yeah, maybe?
Yeah, I will repeat that. The advice was to go with the known, already big names of the cryptocurrencies. And I'm asking, what am I missing if I'm not actually investing when they are unknown, not really already launched? I'm missing the opportunity to be one of the first, like I did with Bitcoin. I wasn't smart enough back then. I was offered.
So what we're talking about here is the invention of the next layer of the internet, right? Web 3.0.
Yes.
So the internet is good for sharing knowledge and information. And information now can pass freely from one person to another. The next layer of the internet is the internet of value, where we have assets that are unique and have a unique rareness, and they can be transferred from person to person and traded on an open market. Just in the same way as, in 2005, we were just understanding what YouTube and Wikipedia actually were. So right now, we don't even have conceptualization of what might be, the next layer. So we're just getting to that now with the Stoner Cats and with decentralized finance, where we can see, okay, yes, new economic models are being tested right now. Some of them are failing, and many of them are going to fail, just as, 90% for every one company that ends up being Wix, there's another 1,000 companies in Israel that end up nosediving, right? So what we need to do is to find a select number of models that work as far as decentralized finance, and even only one or two is quite enough to displace the entire banking section as we know it, and the entire world of finance can then move from this kind of centralized, top-down, people stuffing their pockets, to a more democratic society.
So if I may, I'm going to give you a little bit of a legal view to it. Before I was the owner of my own law firm, I was an in-house in Israel's biggest crypto fund. And I'm today the lawyer who did the most ICOs in Israel, around 40 ICOs or so. And the way we work, still, by the way, still on the green side.
Yes.
Anyway, all the walls here, I don't know if they see it on video, but all the digits here are red. Anyway, so what I was about to say is that vetting an investment, like any investment, first of all starts with the diversification of your assets, as Mali pointed out. And second of all, any project starts with a team. Now, this is a good formula. You see the team, and by the way, I'm talking about the smaller projects that you're aiming for, but know that this is beyond looking at the team and the tech. The team is the way to realize the tech, the idea behind it. The white paper cannot be realized without the team, and the team is the key to it all. Now, even with a good team and a good idea, it doesn't really promise anything. And this is why it's a high risk, high gain market. So it's really probably most depending on the way you diversify everything. And it's maybe 2 or 3 out of 10 if you're good, and it works. Now with respect to the first question you had, not every good project conducts the AML and KYC in accordance with the law. And that they do that doesn't promise you anything in terms of the coin and the TGE, the token generation event. For example, Telegram, we were in this ICO, invested tens of millions in it. I can't really point out the number.
Billions.
Sorry?
Billions.
No,
Oh, okay. I mean Telegram itself.
Yeah.
ICO.
So Telegram, 1.8.
Yeah.
And we invested tens of millions of dollars, and they were highly meticulous in their KYC, same as, by the way, Kik software with a King token, and both were shut down by the SEC eventually. And
to answer the question, I mean, just having KYC and having sent your documents to a specific place doesn't necessarily guarantee that they're going to move forward with the project, and there's all kinds. But look, I mean, people all day are pitching me different coins on Telegram or LinkedIn and Twitter. And I mean, yes, the team is important. I mean, if you see a good team, I mean, but to me that's already after. The first question that I always want to know is, what does the token do? Right? That's always going to be my first question. Because if you can't explain to me, in 2 sentences, what does the token actually, what is it used for, then I'm just not interested. And in the beginning, in 2017, when the ICOs were very new, a lot of the time people would say, okay, look, and they would explain to me, and it just went over my head. That's fine. Okay, so if you can't explain it to me in 2 sentences, I'm out. But now, once, after having been pitched all of those, or having been in this market for so long, my understanding grows, and now I can understand, okay, yes, there is a use case for this, and then we can start to ask the question, is it the right market timing for your token? And if the answer is yes, then we can start looking at, who's the team, and then the token economics, which are, is it an inflationary asset, is it a deflationary asset, is there a limited number supply? How many of the tokens went to the founders? Because sometimes the founders will take 90% and give the market 10%. And in that case, no thank you. You can have your own. You can keep your own shitcoin to yourself. So there's all kind of different questions that you want to ask beforehand. But the number one thing is, what does it do? And if you can get a reasonable explanation, within a sentence or two. Yeah.
What does it do is a very good question in terms of the long run and being a blockchain enthusiast and all that. But from an investor perspective, I've seen multipliers like 13 and 20x over the biggest shitcoins ever.
Yeah.
And by the way, the ICOs that were shut down by the SEC, like Kick tokens, I've seen investors that did 20x on Kick token before the ICO were shut down. But
yeah, Hex, for example, is still going, by the way.
Which one?
Hex. Hex. I mean, it's a coin that basically the entire idea is that it generates more Hex tokens in order to pay off the investors. And in my mind, it's basically they're just hyperinflating their token supply.
Pyramid scam?
Yes, and then the person who created it, he actually is holding on to a big portion, and then every time somebody buys new ones, he actually gets a cut of that. So, but it's still going, and I have an analyst on my team who's actually a millionaire because he bought Hex very early and he kept his money in Hex. So, I mean, there is money to be made on scams, but for me personally, I mean, before
not
I
scam, but shady tokens.
Or something that's
Yeah, shady is less frightening than scam. Everybody already afraid of the scam.
Even stuff that are not shady, stuff that just plainly don't work. I mean, a model that won't work technologically speaking, but is working as a token, can still make you profits.
Oh, but I mean, let's not.
It doesn't happen a lot.
There was one project that looked really good. The team was all right, and then they raised several $1 million, and then they just replaced their homepage with the word penis.
Oh my God!
Yeah, I mean, like outright, they're not even trying to hide it.
I've seen worse.
Okay.
Back in 2017.
So yes, you do need to.
I've seen worse. I've seen worse.
The fun thing about this.
Get this.
Yeah.
In 2017, we invested in an ICO
Which
called
one?
Blockchain Terminal. Blockchain Terminal CEO was Israeli, by the way, former Israeli, who sat in jail for fraud and then went ahead, falsified his identity, set up a startup, started raising. Turns out he was the fraud, but the entire team was legit.
Oh.
Yeah, everybody fell on this one. And they actually ended up like losing, didn't fulfill the ICO, nothing.
So
there's worse.
In crypto, we call that a rug pull. So I mean, basically the rug got pulled out from under you. And Mark Cuban just had the rug pulled out from under him. You guys have probably heard of Mark Cuban, and he's not a small-time investor. And he invested several millions of dollars into one specific decentralized finance protocol. But the thing is, nobody ever looked at the code. Mark Cuban didn't look at the code, and he basically put a lot of his money in, and he encouraged his investors to invest in it as well, but he didn't look at the code. So that's the fun thing about decentralized finance, is that it's verifiable by everyone. anybody with, that understands programming and understands code can read the code, can see exactly how the code is set to execute. So the specific protocol that Mark Cuban was involved in, I have a program auditor on my team who basically looked at it, and he told me the day before the program failed, he said, here's the weak spot.
Ouch.
Yeah, so you can see these type of things actually in advance. You can see what the protocol does, and certainly people get involved in the hype a lot of the time, and this is kind of the incorrect method of doing things. But better, an investor always has to sit by patiently, wait for those pullbacks, wait for the bear markets to play out, right? And that's when you want to increase your dollar cost averaging activities on the big names, and that's when you want to look at the opportunities that other people might have missed. They're looking at the hype project, they're looking at the Dogecoin when it's at 50 cents and going, oh my gosh, I'm going to buy it and I was going to go to the moon, and then it crashes on them 50%, they just weren't prepared for it. Why weren't you prepared for it? It was worth several fractions of a penny 3 months ago, now it's worth 50 cents. Of course it's going to pull back.
What happened, I didn't introduce myself, I'm sorry. My name is Judith Regev, and I am in cryptocurrency, the average Joe, which already either invested or spent a lot of money, really.
Okay.
There were over 3.6 million people invested in this company, over 3.6 million invested in one company, and there was a white paper, there was KYC, and then it was like magic.
Yeah.
Complaints in every single country and investigations, and the company went under. I think you know what I'm talking about.
I don't know
No?
but it's not a new story. I mean, these things happen.
It's one of the biggest one. It's OneCoin, and now the leaders pick up the fragiles and doing something.
Yeah.
And
I remember somebody trying to sell me OneCoin.
Yeah, you guys are experts. It started, I started
I looked at it and I said, no, this is like, and he's like, yeah, but the founder's all enthusiastic, and I'm like, so?
It's not that.
He didn't pass my smell test. He didn't tell me what.
I don't know what your smell test,
do.
but it started.
The investor that came to me, he wasn't able to tell me what does the coin actually do.
This is my question. You talking about what the token can do. I can tell you what I can do with flour and water, and it's going to taste wonderful. Most of us don't understand what you talk about. We want to do something new. We want to succeed. We want to exit from something we do not understand. Some of us are my age. I'm 63 years of age. I have 3 grandkids. And I decided, well, I'm going for it. I'm going to do something I've never done before. Some of us actually can be my grandkids almost, and they are investing. How do we know when to, stop the enthusiasm we have inside and stop the rush of the blood, and what to look at before we lose the money?
So it's a very interesting time in history, right? In the wake of the 2008 financial crisis, where people realized the rich keep getting richer and the poor keep getting poorer. And the only way, you look at it right now in this so-called economic recovery from the pandemic, which is only fueled by the Federal Reserve and the central bankers pumping money into the system. And if you look at the streets of America right now, you can't even get somebody to work at McDonald's. They're offering somebody a free iPhone just to show up at a job interview, right? Just to get, nobody wants to work anymore. Nobody wants to be that retail guy behind the counter. People say, okay, the only way that I can change my status is by investing in capital markets, right? And investing in taking some of that surplus that I'm actually able to do and leverage it a little bit and put it into financial assets. And I think that crypto is coming in this unique time for a specific reason. And I think that the groundwork was prepared in 2017 during that great bull run of Bitcoin. But I don't think that it's the only answer. I think that overall, we need to remain diversified within our portfolios, within our respective investments. And things that are new can be extremely exciting, and you can feel the exhilaration sometimes. But we need to be wary. Gil was the most common thing he said in the last 20 minutes is and the risk and this and the, you know, and this and this and that problem and this problem. There are a lot of problems, but only over time we're going to see those type of problems resolve themselves, and we'll
The
see
market cleans itself.
Exactly.
By the way, taking into account specifically Bitcoin, by the way, if you want to enter into crypto, start with Bitcoin, start with Ethereum. The big five is always a good idea. And thing to notice that Bitcoin, if you look at it as an investment asset, is the best performing asset of all time. So if you enter now and you exit the market, let's say in 3-4 years, you'll be in profit. So it's good to know. By the way,
past performance is not an indication of future results.
yeah. But you know, this is my view. But
You're the lawyer, man.
and like 15 disclaimers, terms of life. But truthfully, if you look at Bitcoin, look at the crypto market, if you're here for the short run, day trading is the most risky thing you can do. And 95% you end up losing.
Yeah.
That's a statistic. You can beat it. But generally speaking, over time, you'll probably end up profiting if you stay long enough. And by the way, if you look at Bitcoin, people who ended a few days ago are now 30% up, right?
Yeah,
I'm one of them.
Anybody who bought Bitcoin at any point except for between March and May of this year is in profit at the moment, as long as they held. There's only 21 million that will ever be created, so we know about digital scarcity, and we know that there's an increasing number of people and countries who want access to those 21 million. So this is really the invention of digital scarcity in a world where money is being printed like it's water, basically. So this is kind of the antithesis of that as we see it. All of the stuff about DeFi, decentralized finance, I believe, presents a very valid.
We're gonna go speaking about crypto for 30 minutes without mentioning DeFi.
Yeah. So basically, what's happening in DeFi, I mean, again, there's new economic models that are being tested, and I believe that there's right now an asset class which is holding a large swath of the world's wealth, which is the bond markets. Basically, people are lending money to the government, and in many cases, they're getting zero or negative yields on their debt. So right now, there's about $12 trillion worth of debt out there that people are actually saying, okay, here, government, I'm going to lend you my money, and I'm going to pay you in order to lend it to you. And even Ray Dalio said a few weeks ago that this is a dead asset class. And DeFi right now, with the stablecoin, obviously the market volatility, if you want to stake Bitcoin or Ethereum, is incredible. I mean, who wants to invest in an asset, take money from a safe asset class like bonds and put it in Bitcoin where you can see a 30% drop in a day? That doesn't make sense. But with stablecoins, right, you can see that yield, which is, you know, right now between 3 and 5% in the DeFi market. And suddenly you realize that there's a very valid alternative to the government system that can actually give more for the stakeholders and investors.
So I think we're way past you, right?
Well, I could have you talk for another 2 hours or so and fill up actually a whole conference just with this format, but we rented the conference
Different time,
call.
perhaps.
We rented the conference call only until 5, so and this is why I put you at the end, because I knew if I put you in the morning, I wouldn't be able to stop you until lunchtime. So thank you very much. Very interesting.
Thank you, everyone.
It will be to be continued.
Thank you.
Before we conclude, before we